Hey, what up, y'all? It's Flames Trading. Today I'll be trying to do a little bit of different video. I've been doing penny stocks, which are high risk, high reward, and dividend stable stocks. Today I'll try to focus in the middle with average growth stocks that I haven't really talked a lot about on this channel. So these are companies that are already established. While they don't pay a dividend, they are not as risky as penny stocks, and they also have huge growth potential. So within this past week, the markets have been pretty crazy with all-time highs. We saw that on Wednesday, and then quite the opposite today with a major dip. So this provides pretty good opportunities to buy as well. So you should always capitalize on red days like this, but pay attention to price action because that's very important as well. So looking at the criteria for these growth stocks, we're going to be focusing on market cap being over 1 billion. Also, we're going to be making sure that the stock does not have any earnings deficit. And also, we will look at whether the earnings are growing at a minimum annual rate of at least 2.9%. And there's also upward momentum with the stock with a relatively low PE ratio. So in terms of PE ratio in the market right now, it's not as important because interest rates are really low. So stocks are still inexpensive compared to what they're earning. But you should definitely be careful if we see a major correction. Having high PE ratio and overvalued stocks can be very painful if the market corrects. Also, you want to make sure you're going with the momentum because the trend is your friend. When you're going with the upwards trend, it's always a good idea. Also, we just want to make sure that the stock is conservatively financed. So what that means is there's low debt, and so the reason you want low debt is to make sure that the stock is not growing because of the debt that they're accumulating, while also making sure that the asset to debt ratio is relatively good at around 150%. All right, guys. So the first stock I want to talk about is PayPal. So if you don't know PayPal already, they've been a major part in digital transactions in the last decade, as well as they are growing at a very rapid rate. So their market cap is around 279 billion, almost 280 billion, and their price target is around $306, and they're currently trading at $238.41. So they had a major dip in the today's market, and pre-market they're already up. All right, let's dive into PayPal's financials. So as you can see from 2018, the revenue is always increasing, and it's on an upward trend, which is always a good sign. That shows that the company is making more and more money, and this is what you want to see as a long-term holder of the stock. The gross profit is also on the rise. Particularly, something I want to notice is that their 2020 earnings was pretty high compared to the fact that everybody else was struggling because of the pandemic. This shows that the company is unaffected regardless of market factors, and they're going to continuously grow. Okay, so let's look at their assets to liabilities ratio. So we can see that their current assets are around 70 billion, while their liabilities are 50 billion. This has resulted in them having a stockholders' equity of 20 billion, and the stockholder equity is also increasing every year. Another good sign. Something else I want to look at is their return earnings. This has been increasing over the years, which is always a good sign because if a company has more return earnings, this allows them to do acquisitions as well as buy back more shares of the stock. As a result, the price of your shares will go up. So let's focus on the net income. The net income is also increasing over the years. Very good sign. All right, the last thing I wanted to look at was their common stock issued. As we can see that their common stock being issued is decreasing over the years. This is a good sign because it means that the company is repurchasing their shares, which in turn ends up increasing the price of your shares. We can see that they've been buying shares multiply, which shows that the company is comfortable paying the price that they do for the stock, and they believe a lot more values to be obtained from the price that they're obtaining right now. All right, guys. So for analyst reviews, this stock has a really strong buy from 35 analyst ratings, and the average price target is $308 from the 240 that's currently at. So that's around $70 of gain, which is pretty good. Personally, I think it's going to go a lot higher, especially if we see a bull market in this recent year. So definitely look out for that. The stock has a really high institutional individuals involved as well, with 85% of institutional investors involved in the stock, with Vanguard and BlackRock leading that charge. Alright guys, for my next stock pick I have is Facebook. So I'm sure most of you guys already know about this social media giant, but maybe some of you guys don't know about their 82 other acquisitions, including Instagram and WhatsApp. And so it's a really good company right now, and it's trading at a discount as well at $278.62, with their 1 year price target at around 340. I'll also go into detail about analyst ratings on this stock. So currently their market cap is almost 800 billion, which is pretty high as well. So let's go ahead and dive into the financials. So if we look at their total revenue has been kind of increasing as well. Actually, I don't know why I said kind of. It has been increasing. Excuse me. But it's on a continuous growth, which is always a good sign because it shows that the company is making more and more money every year, with their gross profit increasing as well. So let's go ahead and dive into their balance sheet. We can see from their current assets, it's around 160 billion, while their liabilities are only 30 billion, making sure that there's total stockholder equity is very high as well, and has been continuously growing, another good sign. And we can see that their return earnings is also growing, another good sign, because it means they can do more acquisitions as well as buy back more of their shares, increasing the value of your shares. So let's go ahead and look at their cash flow. So the one thing I do want to look at is their common stock repurchase. They're continuously buying common stocks. Very good to see from a company. It makes it so that your stock's prices goes back up, and also shows that the company is willing to buy back their stock at that price because they believe that the company will be more in the future. And we want to just look quickly at their net income. Net income is also increasing, another good sign for the stock. Alright guys, for analyst rating, there's currently 34 analyst rating, and it's a strong buy. Currently the price target is 345, which is still relatively good amount to earn from the 278 it's currently at, with the highest being possible at 375. I think personally Facebook is a wonderful stock, and it has, and currently the insider ownership of the stock is around 79%, which is very high for a stock, and BlackRock and Vanguard being some of the highest institutional ownerships of this stock. Alright, for my third pick, I have Microsoft. Some of you guys might not know about Microsoft. They basically just develop, manufacture, license, and support computer software, while they also sell consumer electronics and personal computers and laptops. They're a very large company as well, and their current price target is around 272, with their market cap being over a trillion at 1.74 trillion. Currently, they're also trading at a discount to $30.72, which is honestly a really good price to buy right now. So let's go ahead and dive into the financials. So if we look at their revenue is continuously growing from 2018 and has been growing as well. They recently just released the Xbox as well, which has helped their earnings, but this is a company that has been growing really rapidly as well. We see that through their gross profit as well, and that is also on the rise. So let's go ahead and dive into the balance sheet. So looking at their current assets, they're currently at 301 billion, while their liabilities are 183 billion. So this gives them a stockholder equity of 118 billion, which is pretty high, and it has been continuously growing over the years. And their returned earnings is also growing, another good sign to see in the stock. Okay, so let's look at their cash flow. We can see that their net income is also increasing, good sign to see in the company. And we can see through their dividends that they also pay a dividend, which is also really nice to see from a growth stock. And that shows that the company is willing to give back some of the earnings that they're making. Okay, and if we see that their stocks repurchased, they are continuously growing. So this is going to raise the price of your stocks, making sure that it's a good hold for the long term. Okay, looking at analyst ratings, there's currently 23 analyst ratings, and it's a strong buy as well, with the price target being $282.57, which is a $50 difference from its current price. It's definitely trading at a discount, and you definitely want to get this before it rises. and it has potential to reach to 15. Honestly, this stock is one of the safer stocks, and it has a dividend. You definitely want to look into the stock and do your research, but it's a strong buy for sure. Um, all right, for my next pick, I have is Berkshire Hathaway. This has been a major pickup for big money. This company has insane financials while they're also growing at a continuous rate. Currently, they hold a market cap of 582 billion, while their one-year target is $275. And basically, this company owns a lot of other companies, and through its subsidiaries, it provides a lot of services. That's just in short. It's mostly associated with Warren Buffett. If you know about him, they're richest man in the world right now. So let's go ahead and dive into the financials. So we can see from continuously from 2017 to all the way from 2019, the revenue is growing at a really rapid rate. They did have a bit of a dip from 2019 to 2020, primarily because of the COVID. They were affected by that, but as you can see, it's still a lot higher than the 2018 rate. So it shows that the company is also growing. Let's go ahead and look at their balance sheet. We can see that their total assets are 873 billion, while their liabilities are 422 billion. So this shows that their stockholders' equity is around 443 billion, which is really big. And you can see from their equity, regardless of COVID, it is increasing, which is always good to sign. Let's go ahead and dive into the net income. Net income is also increasing. Actually, it did take a dip, primarily because of the COVID, like I mentioned, but it is on an increasing rate as well. So let's go ahead and look at their common stocks repurchase. We can see that the common stocks repurchase has been increasing, and this shows that the company understands how valuable the stocks are and that they're actually undervalued at their current price, and they're repurchasing share, which is increasing investors' return as well on the price of those stocks. Alright, so looking at their data, we can see from their institutional ownership is at 69%, which is pretty high. Like I mentioned, their revenues on a continuous growth. Their income is also increasing. Obviously, they're dipped because of the COVID, but they have strong financials. Their book to share is very good, and their price earning is really good compared to the expensive stocks that we're seeing right now in the market because of low interest rates. So even if a correction does happen, the stock will definitely be rebounding to the levels it is at right now, and it's not overvalued for sure. The return on assets good, and the return on equity is good. So I just quickly want to focus a bit on their institutional ownership. We can see that State Corp owns 5.57%, and Northern Trust also owns 1.5%. So those are the major investors in the stock. And the price target, 1 year price target is $275, which is still $25 from what you're buying it right now. So if you buy a large amount of quantity, you still see a major amount of profits. And this is a stronghold for many years to come because of how strong their financials are and how continuously they're growing while at a stable rate as well. All right, for my final pick, I want to talk about a little bit less expensive stock, which also provides more opportunities. This stock is Micron Technology, and they're currently trading at $89.82. This is a really strong stock, and basically what they do is they provide computer memory as well as computer data storage, and they've been on a really hot streak throughout this year because of the high demand, while also people staying home because of COVID and increasing the demand. This stock, because of the chip shortage, it's going to continuously grow over the years, and it's a really strong pick for sure. So if we look at their current price, they peaked at $94, and they're currently at $90. So you definitely want to look into the stock. It's a strong pick for sure for this upcoming year when the chip shortage is there's a chip shortage and there's high demand for their product. So let's go ahead and look into the financials. Before I do that, I just want to mention that their market cap is 100 bill, as their first 1 year target is also $108, which is pretty big compared to what they're at right now at $90. So let's go ahead and look into the financials. So we can see from their revenue, it's actually decreasing. So the reason being they were affected by the COVID, and also there has been chip shortages. But there is high demand for the product as well, which is why their stock price has been increasing, and they definitely have room to grow because of high demand for their product. So let's go ahead and look into their balance sheet, we can see from their current total assets, they are at 53 billion, while their liabilities are at 14 billion. This is a really insane ratio to assets to liabilities that we talked about. It's way more than the 150% that we're looking for. We're good to see on the stock, and their current stockholders' equity is at 38 billion, while their stockholder, is increasing as well. Alright guys, so I just want to talk a little bit about Micron's retained earnings. You can see that they're continuously increasing the amount of retained earnings. This provides a lot of potential as well for Micron to buy back their shares as well as do more acquisition, increasing the rate of their growth. So let's look at their cash flow. So we can see from the cash flow it actually decreased in 2020 primarily because of the COVID, which I talked about earlier, but it is on a continuous growth rate and they should be increasing moving forward as there is high demand for their product. Lastly, we just want to look at their stocks repurchase. We can see that they repurchased a lot in 2019, and this ended up decreasing in 2020 primarily because of the fact that their price has increased as well, and because they were hit by COVID. But the stock is on a really good note as well, and it's less expensive than the other ones I mentioned, so it gives you the more opportunity to buy a large amount of quantity in this stock. Alright guys, for analyst rating as well as just discussing a little bit about this stock has a 84% institutional ownership, which is really high and insane, and this is what the big money has been buying because of the fast rate that it's been increasing. And as we can see from the 25 analyst rating, it's a strong buy with projections of 115.86 cents, which is around $25 increase from their current price, and that's a really high increase as well. It's around 30% increase that you should be seeing at least, and honestly I think the stock can go even further. So definitely go ahead and do your research about the stock and see if you want to invest in this stock. I appreciate you guys for making it all the way to this part of the video. And I just want to thank you for the support I've been receiving on the beginning of this journey from 10K to 100K. So this video has been a bit on my longer side, but I didn't even go through in-depth analysis of the company or in-depth of financials. I just wanted to keep it a bit shorter for one of my longer videos. So in terms of holding time, you guys want to just make sure you're holding these stocks for a long time. We're not day trading here. So if you hold for the longest time possible, like if Warren Buffett, their largest man, his preferred time to hold the stock is forever. And the reason being is if you're going for short-term profits, it's really not that worth. When you're investing in good companies, their stock, regardless of how the market reacts, if it goes up or down, is going to be increasing. So you'll always be making money. So in that regard, I just want to thank you guys for being here and have a wonderful rest of your week.